Welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, this is the show where you get all your stock-related queries answered by the experts. You can connect with us live on a WhatsApp number that will be flashing on the top of your screen. Or you can also write to us on our Twitter as well as Facebook pages. But before we get all your stock-related queries, we'll talk about the markets and we'll also focus on all the cement pack into the Buy Now, Sell Now lens segment. But before that, Cheryl, a wise advice, you have to stop wearing this red color because once again the markets are matching the color of your dress, and that's not good for the investors.
I thought I'll add some color to what you're wearing. So since you're wearing black, I thought I'll add on to that red. But yes, as you can see, and yes, I think I should stop wearing red given the fact the markets are declining once again in trading session. And today the reason why markets are declining, remember overnight you had Fitch that went ahead and downgraded US's rating to AA plus from AAA, and that's one of the reasons why you are seeing that trickle down effect on all of the Asian markets, including the Indian markets. Key to note is Indian markets are marginally outperforming the Asian markets because most of the Asian peers were seeing cuts in excess of 1.5%. That's the way how they were trading in the morning. Right now, markets at the day's lowest point. Nifty has given up that 19,600 level as well. You have Nifty Bank that's underperforming benchmarks. Almost a percent cut coming in for Nifty Bank. If you look at the screen for the Nifty index, out of 50 Nifty stocks or 51 Nifty stocks, you have just four of them that are in the positive territory. So that is Asian, I beg your pardon, Adani Enterprises, Divi's Laboratories, Asian Paints as well as Nestle. Only these four counters are holding in the positive territory, while the rest of the markets are in the negative territory, with Hero MotoCorp being the top loser, 2.8% downtick for that one. NTPC, Tata Steel, Tata Motors, Tata Consumer, all of them declining in today's trading session. Needless to say that the advanced decline ratio is very much tilted in the favor of the decliners as of now. Talking about the sectoral indices, yes, none of the sectors are in the positive territory, all of them with trading with cuts, with metal index being among the top losers, auto also seeing a decline of excess of 1%. But one sector definitely that is in focus has to be the cement sector. This morning you had Ambuja Cement that reported its numbers, a lot of channel checks coming in through from our research team. Also the news reports, Shrishti, with regards to the likely stake sale in Sanghi Industries, and what the reports are saying that Ambuja Cement could be the front runner in order to pick up that stake in Sanghi Industries. So a lot of things to talk about in cement sector, isn't it?
Well, yes, absolutely, a lot of things. So let's go across to our colleague Sharad, who is joining us with all those details. So we'll try to understand how the channel checks are suggesting, as well as what are the results from Ambuja Cement and what the reports are suggesting. But first up, Sharad, what are the channel checks suggesting? How is pricing moving in the cement pack?
Well, the interesting thing is the monsoon impact, and because of that there's a sluggish demand overall. It's happening for the month of July itself. If you look at it, the prices have actually gone down. It's coming down almost ₹2 per bag. And important thing is that the cement mills, what they have stated to us in our channel checks, they've stated that they won't be taking any price hikes per se for the month of August. Now do remember that the dealers have also indicated that the pricing may not sustain going ahead, and there are two reasons for it. First is of course the monsoons, and second is the upcoming festive season. Now to break it down on a quarterly basis, Q2 the demand is expected to be subdued of course for the monsoon reasons. Q3 is for the festive season, and Q4 interestingly is for the elections to come. Apart from this, there has been certain segmental price changes which I would like to point out. For the northern and the western markets, there is a price hike of roughly 2 to 6 rupees per kg, while for south, east and central markets there is an increase of roughly 3 to ₹6 per bag. Now do remember that the cost trends that has reversed. Now to put it simply, the pet coke prices, they have actually increased by 10% from their lows which we had seen earlier. And this is coming on the back of higher crude prices. So there would be of course change in the margin mix as well going ahead for the second quarter. So this is what overall the channel checks are suggesting.
All right, that's the channel check then. But let's talk about one big headline that this morning that grabbed everyone's attention. And given the fact that there has been a lot of news reports related to that as well, Sharad, one, the fact that once upon a time there was Shree Cement that was in race to go ahead and buy Sanghi Industries. Now the reports are suggesting that it is Ambuja Cement, in fact, that is in the front runner. We know that the talks between Shree Cement and Sanghi Industries broke down. But we are still awaiting for that sort of an announcement. We're not yet sure if it will happen. But if that happens, what does it mean?
See, basically entire cement industry is going through a consolidation. That's a known fact. But the important thing over here is that the company itself is having a strong enterprise value. Now let's just get through the numbers, how it will impact. Now overall the deal is expected to happen today, and that's the announcement is something which we are waiting for as per the reports. And do remember that the enterprise value for this business that stands at roughly 6,000 crore rupees. Now the promoters itself for Sanghi, they own roughly 73% stake in the company, and the important thing is the capacities which the company is having. The cement capacity is almost 6.1 million tons per annum, while the clinker capacity is coming in at almost 6.6 million tons per annum. Now, of course, the enterprise value, if it's taken at 6,000 crore rupees, that means the EBITDA per ton for the enterprise value comes in at roughly almost $120 per ton, and in the current prices, if you look at it, that's coming in at roughly $80 per ton. So of course there is a kind of a premium coming in when it comes to the overall EV numbers, but it'll be very interesting to see at which deal, if any, announced, and also how it shapes up, especially in the consolidation part of the entire cement space.
Okay, so that's all about how the consolidation can happen and why the Sanghi industry in focus. But other than that, Sharad, lastly, what is your take on how are you looking at Ambuja Cement's number, because that's the one from the cement pack. So what cues other cement companies will be taking up now?
See, basically, if you look at the earnings coming in for the cement companies, they have been largely mixed or weak. But over here, the numbers, if you look at it for Ambuja Cement, they have been largely inline set of numbers. Now, looking at the EBITDA numbers, it's a 39% year-on-year basis growth, and it has actually been above the consensus estimates going ahead. And the EBITDA per ton, the number stands at roughly 1,045 rupees. Lastly, the volumes, if you look at it, that's also a 23% year-on-year basis growth, and that has also come in line with estimates. So, largely inline set of numbers have been coming in. But do remember that over the next 1 or 2 quarters, the demand and the pricing both will be low.
All right, so that's all about Ambuja Cement's numbers and what also other cement counters posted. And this was an exhaustive segment on the cement. Thank you so much, Sharad, for actually enlightening us what is happening in the space with regards to pricing, consolidation, as well as earnings. Thank you so much for joining us on this leg of the show. And that was Sharad taking us through all the moving parts in the cement sector. But yes, let's listen out or hear out from ET Now Swadesh's managing editor Nikunj Dalmia on what he makes of what's happening in the cement space.
Adani's are acquiring something worth 6,000 crore, roughly. Now, for a group where there were debt issues beginning of the year, we are forgetting that. I mean, you will only acquire something when you are confident of servicing your debt. You may be in a... It doesn't matter if there are too many distressed assets available. If you don't have the ability to service that acquired debt, you're not going to buy it. So while you may say that in good times you may want to make an acquisition, it's only when you're confident of your cash flows and when you've gone through terrible meeting in terms of your debt profile and question marks were being raised, you are going and making an asset acquisition, which means strategically you feel that you can make the acquisition, service the acquisition. B, cement is where your serious focus now is going to be there. So there are two ways of looking at it. I mean, there was no urgency, but if you're going ahead with it because you're confident of servicing the debt, and that also speaks that Adani is now really going to be changing the rules of the cement sector.
So that's the take coming in from the managing editor on the cement packs. But if you'll see, all the cement counters, they have been buzzing on late. Ultratech Cement post the earnings has seen a good run up. Other than that, if we talk about Ambuja Cement, that's also in focus, but with the markets is seen to be declining. But Sanghi Industry on the back of reports is seeing and locked at the upper circuit of 5%. So let's try and connect with our expert today and try to find out that which particular stock from the cement pack is on their radar. And for that, let's welcome on board Kunal Bothra onto the technical side. A very good morning, Kunal. A lot of cement counters in focus. So amongst the pack that we are seeing a lot of action in, which particular stock is on your radar and where investors can actually bet on?
Good morning, Srishti. Well, frankly, there are not too many cement stocks which are actually looking very attractive at current zone. Specifically, I think the likes of Ultratech Cement, Shree Cement, Dalmia Bharat, etc. These stocks have already gone through a sharpish kind of a correction or a moderate correction, depending on the beta nature for themselves. So I would probably be, a bit wary into investing stocks or as a basket into the cement pack. But if there's one stock which I believe investors can look to trade upon as well as look to buy specifically on this correction and try and take advantage of this correction, I think has to be Ultratech Cement, the stock which had done formidably well right from that March corrections, or the correction which started off in 2023 for the indices. The stock had been an outperformer right from that patch of correction for the index. So I think that's a stock which looks very attractive from a long-term play. If in case the stock corrects by another 200 to 50 points and say comes closer to 8,000 levels, those are classical levels to buy the stock from a contra basis.
Alright, on a contra basis, 8,000 would be a right price to go ahead and buy Ultratech, and that's the counter that Kunal is bullish on in the cement pack. But on that note, we slip into a break on this edition of Buy Now Sell Now. But let's take note of the markets. We are at the day's lowest point, 1% downtick coming in for benchmarks. We'll be back soon and take your queries. Welcome back. You're watching Buy Now, Sell Now and ET Now, a show where we get you answers for all of your stock-related queries. As of now, if you look at the markets, a tad bit of bounce back from the day's lowest point. Nevertheless, we have given up that 19,600 mark on the Nifty. But yes, like I mentioned, this is a show where we get you answers for all of your stock-related queries. Viewers, you can connect to us on the WhatsApp number that you will be seeing flashing on the top of the screen. Also, do remember, every time you write to us, write your name. Also mention the stock that you're looking to invest in. If you're already invested in a stock, mention the buy price, the quantity, as well as the time horizon that you are looking to invest in a particular counter, because with that, our experts will be able to help you better. And talking about our experts, today we have Kunal Bothra as well as AK Prabhakar on the show. Good morning to you, Kunal, as well as Mr. Prabhakar. Thank you so much for joining us on ET Now. And let me kickstart with the queries. With the first query that I have is which is coming in from Jay Krishnan, and he has Anupam Rasayan at the price of 1,073 rupees per share for the medium term. What should he do? Should he exit or average? And if average, then at what levels? Given the fact he's asking a level for averaging a counter, Kunal, I'll take this query to you.
Well, I would suggest to, first of all, I'll suggest to, average the stock only if it corrects further towards 840 mark. I think the major retracement support, or the first rather retracement support, actually comes closer to 848, 850 mark for Anupam Rasayan. The stock has corrected in the last 3 months. I think if I'm not wrong, from 1200, it's already at 900, 930 levels, which means that there could be a further sell-off into the stock price. If you're looking to buy or add or accumulate further, then I think start off in case if the stock corrects the sub that 850 mark.
Okay, moving on to the next query then, and coming to you, Mr. Prabhakar. Very good morning, first of all, and coming to the question. This one is from Matthew from Muscat, and he's holding 150 shares of Polycab from a price of 2,100 rupees, and what a phenomenal run-up this particular counter has seen. And he's also sitting at more than double the gains right now, and he's a long-term investor. So at this point, should he stay invested or book some profits in this one?
Morning. I think he has done a very good job by holding on to the stock, and the stock has doubled. So we need to appreciate investors who can hold on. So I think the business model is still good. One can hold on to the stock. So from my side, it is a hold.
All right. This next query that I have is coming in from Venkat. He's writing to us from Pune, and he's bought on mobile at a price of around 150, about 100 shares. He's sitting in a huge loss of approximately 50%. What should he do? Should he sell immediately, wait for a slight pickup in the stock price to exit? Kunal, what the strategy should be out here on mobile? A stock that is worth even betting on, and now that he's already made a loss, what should he do?
Well, I think first thing is that you should have exited the stock much earlier, especially at the point when the stock was getting into a sharp corrective phase. But then now that the fact that you've realized that it may not turn out to be a great investment, I think current levels could also be a good level where you may look to exit the stock. And it's better that you start parking the money or trying to take advantage of this correction in the markets to try and park the money back into those quality large caps or mid cap names. So I think that's a much more better strategy. So for example, HDFC Bank, ICICI Bank, these stocks are come back towards a moderate zone of correction for themselves. They could be much better bets from a medium to long term perspective. So I would recommend to make that switch even at current levels.
Okay, moving on, and Mr. Prabhakar, coming to you for this query. This query is from a is from Rao, and he's holding 55 shares of Asian Paints from a price of 3,106 rupees. He's been holding these shares from the past 2 years and now at a profit of 8% only. And what he feels is that it can't generate much of a wealth in the times ahead. So, wants an advice: should he book out profits in this one and rather make a switch to stocks like HG Infra, PSP Projects, or NCC with a 3 to 4 years investment horizon?
So, it is a very tricky question. You have, a lot of companies which are competing in the paint space now, and Asian Paints being a dominant player with 45% market share, and JSW Paint has come. You have Pidilite also entering. You have Grasim entering, and that is something which is putting pressure on the stock, which was trading at a premium. But when you take the stock which you have mentioned, NCC, PSP project, and one more stock you mentioned, these are in construction. Now NCC trades at a very attractive valuation. So I think one can look at NCC. Yes, if you are looking at 3 to 4 years, you can look. But Asian Paints, now it is an uncertain time. No, it will come back, but it will take time. But NCC can give a better return, and even PSP project, HC Infra, they can do better because of the attractive valuation and the which India is building.
Okay, Mr. Prabhakar, you wanted a take on HCC and not NCC. So, any advice on HCC right now?
HCC we don't track. We won't be able to track.
All right, this one is coming from Rama, writing to us from Trishur, Kerala. Wants to know, Kunal, Adani Enterprises attractive buy at current levels?
Well, not at current levels, but in case if it corrects towards 2200 mark, which was the recent low for Adani Enterprise, that would be a better level to buy the stock. It's gone through a sideways range in last 3 weeks. I think 2300, 2350 has been broadly the pivot support for Adani Enterprise. So I believe that it's better that if it comes back towards the previous major support, in case if the market intensifies its correction a bit more, then I think it's always better to buy these stocks at a corrective phase. So 2200 mark could be a better level to buy Adani Enterprise.
Oh, sorry.
Okay, moving on, and Kunal, once again coming to you. This query is from Jay Krishnan, and he wants an advice on Escorts. He's a medium-term investor and wants to know that is this a good time to enter Escorts, because post the results we have seen a good jump post the management commentary as well. So with the 3% of gains that the stock is currently holding, would that be a fresh buy?
Well, I would not recommend a fresh buy on Escorts at current levels. In fact, for the stock, most of my short-term indicators are actually getting signaling a deep overbought territory for Escorts. So I think even though the stock is up 3%, 3.5% today, I would still believe that it's ripe for a decent correction from current levels. So I would suggest to avoid the stock at current levels. If you're looking to time the stock specifically, would suggest to wait out for a sizable correction. A 5% correction could be a decent enough correction to start off if you're looking to buy the stock on dips.
Okay, Mr. Prabhakar, this is coming to you. This one's from Akhil. He's writing to us from Delhi. He's a long-term investor, saying that he cannot do this daily intraday trading or so. He wants to know about, one is Patanjali Foods. He already has this counter, 290 shares at a price of 650 rupees per share. He wants to know whether he should buy some more of the stock for the long term, and his long term, what he is saying, is 2 years. Also, he wants to know a mid-cap or a small cap auto company that he can look to invest at current price for the longer term. That's 1 to 2 years.
Mid cap is a easy thing. Auto stock. I like CIE Auto, which is a MNC company. Previously, Mahindra had a stake. So now Mahindra has exited the company. This is one good stock for a long term.
Okay. Okay, I guess there has been some technical glitch, but moving on, let's get back to the queries. And Kunal, this next query is from Nagesh from Bangalore, and he is looking for a trade wherein whether he can buy Canfin Homes for the month of August and rather sell NTPC for this particular month. So he wants your advice, and he's also saying he's a big fan of yours.
Thank you so much for that. But I think the rationale for both the trades could be a bit tricky. NTPC actually was one of the sell calls which I had given yesterday and today morning. The stock is down 1.5%, but my expectations are very moderate for NTPC. I'm not expecting a big correction on the stock. Maybe 215, 218 broadly could be the best price which we can expect for NTPC on the downside. So maybe another 3, 4, 5 rupees on the downside is what you can expect. So that could be a good shorting opportunity, but I'm not sure whether you're looking at such kind of a small return or a risk reward of 1:1 for a stock like NTPC. So it's better to avoid the stock for shorting, specifically at current levels. If you are looking at a slightly medium term time frame, Canfino on the other hand, I would again be a bit wary, because typically what we look out for is that when stocks see a sharp sell off, whether there is an immediate lift off which happens into the stock price, recovery which happens into the stock, that could determine that a near term bottom could be in place. Now after that sharp sell off for Canfino from 900, the stock has come down to 700, 730 mark, and there is no major signs of recovery for the stock price, which means that even if there's going to be a mild bounce back, the stock may see one more round of correction. So it's better to wait out for the entire correction to pan out for Canfin Homes. So it's best not to take both the trades.
All right, we have Mr. Prabhakar back, and let me go back to the previous query there where he left out talking about Patanjali. He did say that in the mid-cap auto space, CIE automotive is what he likes. But Patanjali Foods, 219 shares is 650 is what Akhil already has. Buy some more right now for the longer term. Do you think it's a good bet to take?
Positive on FMCG as a whole. But Patanjali we don't track, so I won't be able to comment on a specific company here.
All right, no problem then. Let me take this next one then. This one is coming from Balan, and he sold IDFC first, and in fact bought IDFC when the merger was announced, as it was beneficial to hold IDFC is what he's saying. But he sees IDFC first moving better than IDFC. Now Kunal, what should he do? Should he switch back to IDFC first bank? Is it a yes?
Well, I think it makes sense to stay invested in IDFC First Bank. I think that's a much better bet. The beta for the stock is a bit high as compared to IDFC Limited, as far as I can, the statistical part of the analysis goes for both of these names. So I would probably prefer IDFC First Bank as a better bet because of the slight high beta nature. But then it also has to gel with your investment rationale or trading rationale. So if you are comfortable with a high beta stock, only then it makes sense to switch to IDFC First Bank. Otherwise, I think you can stick to IDFC Limited.
Okay, moving on to the next one. And Mr. Prabhakar, the next query is from Vincent. And he's actually looking to invest 30,000 rupees per month into equity SIPs. And he has a couple of names in mind and wanted your advice which one to bet on. And he's looking at HDFC Bank, L&T as well as HUL where he can invest this money. So what will be your advice?
He has selected very good quality stocks. I think I will stand by him. So whatever he has suggested, 3 stocks, it is systematically you can buy it.
This one is coming from Sunny. First of all, he's saying that your sell call on Jupiter Wagons was at a perfect time. So he's saying thank you for that. The other thing he's asking about is his book profit in Sarda Energy at 2000 levels. 1:10 stock split is happening on August 4th. At what price should he start accumulating Sarda Energy right now?
Well, I would suggest to wait out for Sarda Energy, and I think my sense is that this is the first time we're seeing on the charts that the RSI has made a lower low and the prices have actually not confirmed a lower low, which means that the indicators are giving the first maybe a preemptive signal that the trends would start to reverse for Sarda Energy. So I think the recent high for the stock, if I'm not wrong, was 2025. The stock is down 100 points. The previous low for the stock is around 1840 mark, which means a correction of another 50-80 points should be due for the stock in the near term. So even if it's a short-term play you are looking out for, I would sense that at least a 50 to 80 point correction is something which I would preempt for the stock. So if you're looking at a short-term play, then I would suggest a buy only below the 1850 mark.
Okay, so that's the take coming in on Sarda Energy. But with this, viewers, it's time to slip into a short break. But don't go anywhere. We'll be right back to take more of your stock-related queries. So stay tuned. Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all your stock-related queries. And to answer the same today, we have AK Prabhakar as as well as Kunal Bothra with us live on the show. And for the next query, Kunal, I'm coming to you. This one is from Gurinder Singh from New Delhi. And he was actually invested in BSC, but he booked out at a price of 750 rupees. And the stock has moved higher from those levels now, and he's looking for a re-entry. So at this point in time, will that be a buy?
Well, may not be at current levels, but the stock, if it corrects back towards that 750 mark, which ideally I think it should, because the recent rally which has happened for BSC, and that's from the July highs of 787 towards the recent high, today's high of 870, is met with a falling divergence for the stock price on the daily charts, which means ideally the stock should retest at 750, 770 zone. So I think a better level to buy the stock should be at lower levels. So 770 could be a good point where you may look to start investing or rebuying the stock.
Okay, the next query I have is from all the way from Australia. Then this one is for you, Kunal. Kiran Krishnamurthy has written to us saying he's a big fan of yours and he wants to ask a long-term question to you, and that is on IOC. He's asking, is it a good time to invest lump sum in IOC for a period of 3 to 4 years? If not, which is a good stock to invest? He's saying it doesn't have to be from the similar oil and gas sector. It can be any sector.
Thank you so much for that. First of all, on IOC, I would believe that it's been a very disappointing set of stock in the sector as such. The OMC, we've seen so many times that these stocks are plagued with some sort of news flow, which tends to lead into a sharp correction or a huge underperformance for these stocks. So I'm not sure what's the rationale of picking up IOC as a long-term bet, unless you are looking out for the dividend play. That's the play which you are looking out for in stocks. So that could be one sort of rationale, but otherwise purely on charts, I don't see any major reason for investing into IOC. As an offset, I would believe that there are better stocks in the mid-cap category. If you're looking at slight high beta names relatively, then I would recommend maybe IDFC First Bank, AB Capital, L&T Finance as more stronger bets from a longer term play.
Okay, so that's the take coming in on AB Capital. That's one of the recommendations by Kunal. But Mr. A.K. Prabhakar, the next query is from Parvinder Singh. He's a senior citizen and living in Noida. He wants your take on two counters. Firstly is Garware High Tech Films. He's been holding 30 shares from a price of 854 rupees. More than a year now, he's been holding these shares, and he also has 70 shares of Hindalco from a price of 398 rupees. So there are profits in both of these names. So what should he do next, and what's the outlook maybe for the next 2 quarters?
Garware High Tech, I think this is a good stock. And now only it has started to perform. So I think it is safer to hold on to it. Intermediate correction will be there, but long term I'm positive on the stock. Hindalco, metals are a bit difficult to predict now with global slowdown and US also getting a downgrade. So I think metals can be metals we are not very positive for a medium to long term perspective, but short term is very difficult for us to predict.
Right, this is a bit of a longish question for you, Mr. Prabhakar, and this one has come from Sagar. He asked 2 questions. One question was directed to me, so that I've answered him already. But the other one is on ITC. Now, what he's saying is that he wants your view on ITC. He's already shorted ITC on the demerger news because he felt that it was a bit negative for the shareholders, given the fact that ITC decided to keep 40% of the stake with themselves and avoid hostile takeover. But he wants your view on this because given the fact that the hotel business is asset heavy, would not be contributing much to ITC's revenue. So what's the rationale behind it? Do you think that it is a win-win for shareholders to continue to stay put with ITC even with the demerger news, or should you think that this will weigh on the stock going ahead?
ITC hotels, it hardly contributes anything to the company. So I don't think it will have any impact. But we have to look at cigarette business where VST and even Godfrey Philip came with results. Their cigarette business growth was more than 15%. If they can grow at 15%, I think ITC will be growing better than that. And ITC cigarette business, EBITDA alone, if you take EBITDA margins, they are about 45 to 48%. So I don't think this ITC hotel demerger is going to impact them much. But I'm very positive on ITC going forward also.
Take on ITC. But Cheryl, I'm curious to ask and curious to know that what question Sagar posted you instead.
The same question about which you and Kunal both asked me this morning. The fact that I'm wearing red today. So you wanted to know, does the market actually change its course after seeing I'm wearing red, or do I decide to wear looking at the market? So I told him no, that's not the case. I decided to wear red last evening itself. So yeah, it's not me that's doing the trick on the markets today.
So to all the live viewers, I want to put up a poll that who all wants Cheryl to wear green tomorrow, and maybe we can get some interesting answers. So viewers, do write and do mention that as well. We'll be that will be interesting to note. But let's move on and once again get back to the queries then. And Mr. Prabhakar, the next query is coming from NSS Lakshmi, and he's purchased two counters. Firstly is Hind Copper, 1,000 shares from a price of 68 rupees, and he also has 500 shares of First Source Solutions from a price of 77 rupees. In both of these names, what to do next? Will that be a hold or book profits at this point in time?
No, Hind Copper is a long-term hold. First Solution we don't track, so I won't be able to comment on it.
Okay, First Source Solutions, Kunal, any take on this one? He's having the shares from a price of 77.
Well, I think we should stay put for both of these stocks, frankly. Even for First Source Solutions, I think it's an attractive chart. It started to show signs of recovery. It's just the first stage of recovery for First Source Solutions, from where the stock had corrected from 240 levels to I think at 105 odd mark. So it's the first stage of correction, which first stage of rally for First Source Solution, which means that the stock should see more upside over the medium to long term.
This one's coming from Sandeep Kumar from Tamil Nadu. This one's for you, Mr. Prabhakar. KPIT Tech and Tech Mahindra. I believe he's holding both of these counters for the longer term. He wants to know whether it makes sense to stay put with these counters, both of them. And if not, in case you say that you should exit one of them, then he wants to know which is an alternative that he can look at.
Both are very good stock. KPIT also we like. Tech Mahindra I personally hold. So there is a disclosure there. So now there also there is a change in the management. Mr. Mohit Joshi from Infosys has taken over. So whenever the new management comes, it takes 1 year for him to set the house right. So I think for a long-term person, Tech Mahindra is very good. Even KPIT Tech, you can look at even Tata Elxsi in that matter if you are looking at KPIT. So almost similar business. All these stocks we like. IT maybe next 6 months to 1 year. We are not positive, but for somebody looking at 2 years to 5 years, IT is the best place to be.
Okay, so that's the take coming in on IT. But see, Cheryl, we already got some answers from our viewers, and Padma Sivarao is giving it a thumbs up for a green dress. So we'll wait by and see which color Cheryl choose. But let's move on. And Kunal, Padma Sivarao wants your take on Exide. This particular counter has been buzzing off late, and he wants to know, is this a right time to enter this one?
Well, it's been a performing stock, and I think the trends have changed dramatically for Exide, because the stock used to be a big drag. From 2018 highs of 300, the stock had fallen down to 125, 130. And I think it's just in the last 2 months where the pace of rally has intensified for Exide. So which means that this could be a stock which could be at a cusp of a bigger turnaround. 300, which was the high for 2018, I think those levels should be taken out in this phase of the rally. So hopefully in the next 2 to 3 months, we can expect another 40-50 point jump for the stock. So it's a good time to buy the stock, as well as use dips to add or accumulate more.
Alright, the next query that I have is coming in from Suman Mukherjee from Kolkata, and this one is for you, Mr. Prabhakar. Long-term investor wants to know, does it make sense to invest in the real counters right now? And the counters that the viewer has mentioned is IRFC, RVNL and IRCON International.
I think IRFC, dividend yield is still good. So for a long-term investor, it is okay. And their employee cost is one of the lowest I've seen in NBFC. So that is okay. But other stocks have run up. But IRCON valuation, still there is a comfort. But the way many railway stocks have run up, you have to wait for some correction before you enter.
Okay, so that's the take coming in on IRCON and the railway counters. But Kunal, the next query is from Sudha, and she's actually looking to invest almost 3 lakh rupees in 2 stocks. Wants her advice in amongst the stocks that she has in mind, which one to choose from. She's looking at PVR Inox, Tata Motors as well as Hero MotoCorp with a 2 years investment horizon.
So from current levels, if you ask me, then I think PVR Inox and Hero MotoCorp could be better bets. Given the way these stocks are poised, I think PVR Inox has just given a breakout above that 1500 mark. We tracked the stock for a short-term target of 1600, but I believe now the stock should be in line for more returns on the trending side. So it's a good time where you're looking to buy the stock. Even for Hero MotoCorp, I think this correction in the last 2 days specifically should actually come as a good advantage for short-term as well as long-term investors. So if you're looking to buy the stock at current levels, it could be a good buy. Tata Motors, even though my long-term targets are, quite, or I'm very bullish on the longer-term prospects, but then buying the stock at 640, 650 mark may actually not turn out to be a good risk-reward strategy. So that's why I would suggest an avoid on Tata Motors. In case the stock corrects and say comes to sub 600 mark, then you can look to start accumulating this also.
All right. The next query that I have is coming in from Samrat. He's writing to us from Bengaluru. He has 2,000 shares of Federal Bank purchased at the price of 141 rupees per share. He wants to know what's the future of the stock. What's your take on this, Mr. Prabhakar? Federal Bank, how does this one look to you? It's a good one that Samrat should stay put with?
I feel so. No, we have a buy on Federal Bank. No, it has not performed for last few months or maybe a longer term, but long-term prospect is very good in Federal.
Okay, so that's the take coming in on Federal Bank. But with this, viewers, it's once again time to slip into a short break. But don't go anywhere. We'll be right back.
Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking all of your stock-related queries. We have our experts, Kunal Bothra as well as Mr. A.K. Prabhakar. And Kunal, I must say our viewers track you very, very closely, and not just the stocks that you recommend, also what you're wearing today. And one of them also pointed out is not just you, Cheryl. It is Kunal also who is actually donning the color red in his attire, isn't it, Kunal?
But yeah, mine was a bit more strategic.
Oh yeah, strategic. See there. Now you know who you all should track very closely when it comes to deciding on markets. But let me take this next query then, and it's coming from Mr. Jitendra. He's writing to us from Pune, and he's a long-term investor. He's currently holding Shyam Metallics, Mr. Prabhakar, 81 shares at a price of 339 rupees per share. He wants to know whether he should book profits from this one and instead look at a sugar pack. What's your take? Both of these counters are in the commodity space. So do you think to exit a metal counter and go to sugar?
That would be a very difficult question because metal already it is very cyclical now, and even sugar has not performed of late. But it makes sense if you want to enter sugar space. But you need to have patience. But there are other companies. Kunal was mentioning about NBFCs. So if in this correction, if NBFCs give a good correction, then I think that will be a very good entry. M&M Finance is there, Shriram Finance is there, Chola is there. So NBFC makes better sense to me than shifting from cyclical to another cyclical.
That's the take coming in on financials. But with this, viewers, let's kickstart taking all your stock-related queries in a special segment that is rapid fire. And Kunal, the first question that I have is on BEL. Kailash from Bangalore is holding 500 shares from an average price of 64 rupees. So at this point, should we book profits or hold on?
Hold on.
All right, this one is coming from Manjali from Chandigarh, a senior citizen. Motilal Oswal, 160 shares at price of 700 rupees per share. What to do, Mr. Prabhakar?
Hold on.
Okay, moving on, and the next question is on Vedanta. Kunal, the viewer didn't share his name, but he's holding 500 shares of Vedanta from a price of 270 rupees. The viewer's name is Sandeep. So what will be your advice?
I would suggest to exit the stock.
Okay, Mr. Prabhakar, this one is coming in from Sai Kumar from Pune. Tata Lexi, good time to buy at current levels for the medium to long term.
Yes, it is a good time to.
Okay, Kunal, Soumite wants to know that what to do in Kotak Mahindra Bank. The buy price is 1902 rupees. So at this point in time, what will be your advice?
I'll suggest to average closer to 1770 if the stock corrects to that zone.
Okay, Kunal, Anant Nayak from Bangalore wants to know Spark and NoSil, a good buy at current price?
Well, I would suggest to wait out for a correction, at least a 5% correction from current levels, better levels to buy.
Okay, Mr. Prabhakar, what's your long-term advice on Mazgaon Dock? Aditya has been holding the shares from an average price of 625 rupees. So at this point in time, what to do next?
I think I won't be able to comment on Musk on top.
All right. Kunal, Polyplex Corporation, current market price. Jay Krishnan wants to know, should he look to buy this one and what sort of target do you have?
I would not suggest a buy.
Okay, Kunal, Vivek is already holding TCS and Infosys, but on mid and small cap IT stocks, he wants to invest on dips. So, any counter from the mid and small cap IT space?
KPIT, Persistence, Birlasoft, these are better bets even at current levels.
All right, Venkataramani from Bangalore wants to know, fundamentally, Railtel and Motherson Sumi Wiring a good buy for a period of 12 months, Mr. Prabhakar?
I feel so. No, Motherson is my top pick in that.
Okay, Kunal, Bisakha has been holding 50 shares of Aster DM from a price of 250 rupees. So, book profits or hold on?
Book profits.
All right, and with that, we come to the end of the rapid fire, the query segment, discussion on cement, also my wardrobe color as well. Thank you so much, Mr. Prabhakar, as well as Kunal, for joining us on the show and helping our viewers and resolving their queries. And with that, viewers, we're totally out of time on this edition of Buy Now, Sell Now. But before we actually wind down on this segment of the show, let's listen into what exactly Ajay Kapoor, who is the CEO of Ambuja Cements, had to say on their Q1 earnings. Remember, we spoke about Ambuja Cements earlier. Listen into what the management has to say.
Revenue and cost front, EBITDA for the quarter came in at rupees 1,930 crores, which is a jump of 55% YOY. EBITDA on a per ton basis for the quarter was at 1,253 per ton, implying a jump of 41% YOY. The EBITDA margin expanded by 670 bips to 22.2 on a YOY basis. PAT grew by 31% YOY to rupees 1,135 crores. As on 30th June 23, the consolidated cash and cash equivalents in the company's book is at rupees 11,886 crores. On a standalone basis, the results look like this. The revenue up by 18% YOY at 4,730 crores, in line with volumes which were up at 23%. EBITDA grew by 48% YOY on a like-for-like basis, excluding dividend income of rupees 550 crores in the same quarter last year. At rupees 1,138 crores, the margin expanded from 19.2% to 24.1%. A robust PAT growth of 29% on a YOY basis, again like-for-like, excluding dividend of 550 crores in the same quarter last year. Our ongoing investments in capacity expansion and sustainability will enable us to achieve our long-term objectives. We have placed orders to expand clinker capacity by 8 million tons at Bhattapara and Maratha units on highest ESG standards with 42 megawatts of waste heat recovery, provision to utilize 50% alternate fuels, and provision to operate on green power. This will enable production of blended green cement of 14 million tons post all requisite approvals. These projects are expected to be commissioned in next 24 months, and the capex will be funded from internal accruals. Our Ametha integrated unit is set to be commissioned by Q2 FY24, and we are committed to increase our waste heat recovery capacity at a group level to 175 megawatts by July 2024 from existing 90 megawatts as on June 23. We are committed to delivering sustainable growth and value to our stakeholders, as our priorities continue to be water governance, sustainable livelihoods, women's empowerment, rural infrastructure, and social inclusion. The company won several awards and accolades for its outstanding work in customer service, safety, circular economy, and CSR. Ambuja has been recognized as India's most trusted cement brand 2023 by TRA Research. Ambuja has ranked amongst India's top 50 most sustainable companies across sectors and amongst India's top 3 most sustainable companies in the infrastructure and engineering sector by BW Businessworld. Cement industry is in positive cycle of demand as well as cost factors. This is coming at the most appropriate time when the company is under transformation phase, buoyed by synergies with the group.